Crypto or stocks? Which is the better investment? This question might have crossed your mind more than once, and it's no surprise. As we navigate through the 21st century, the world of finance and investment is constantly evolving, becoming more complex and varied with every passing year. In the red corner, we have cryptocurrencies, digital or virtual currencies that use cryptography for security. They're not issued by any central authority, making them theoretically immune to government interference or manipulation. They've been hailed as the future of finance, with their potential for high returns attracting investors worldwide. However, they're also known for their volatility, and the crypto market, still in its infancy, is subject to regulatory changes and security concerns. And in the blue corner, we have stocks, shares in the ownership of a company that represent a claim on part of the company's assets and earnings. They're more established, with histories that go back centuries. Stocks are considered a staple in any investment portfolio, offering typically more stable returns over the long term. However, like any investment, they're not immune to market conditions, and individual stock prices can be as unpredictable as a roller coaster ride. The purpose of this video? To present a balanced view of these two investment avenues, to compare their pros and cons so you can make an informed decision based on your individual preferences, risk tolerance, and investment goals. And remember, it's always important to do thorough research and consider seeking advice from a financial advisor before making any investment decisions. So, whether you're a risk taker enticed by the allure of potentially high returns from crypto, or you prefer the relative stability of stocks, we've got you covered. Or maybe, just maybe, you'll discover that a mix of both could be the winning strategy to mitigate risk and diversify your portfolio. So let's dive in and dissect these two investment avenues. Cryptocurrencies, they're the new kids on the block, but what makes them so attractive? Cryptocurrencies are digital or virtual currencies that use cryptography for security, making them extremely difficult to counterfeit. But their allure goes beyond just their technological sophistication. Firstly, the crypto market offers the potential for high returns. Some early adopters of cryptocurrencies have seen their investments increase exponentially over a short period. This rapid growth has led to an influx of investors, all hoping to get a piece of the crypto pie. Secondly, cryptocurrencies offer flexibility and global accessibility. Unlike traditional banking systems, cryptocurrencies have no geographical boundaries. You can send or receive digital currencies from anywhere in the world at any time with just an internet connection. This makes it an attractive option for those in regions with limited access to traditional banking systems. Another major draw of cryptocurrencies is the potential for anonymity and privacy. While all crypto transactions are recorded on a public ledger known as the blockchain, the identities of the parties involved remain pseudonymous. This feature is particularly appealing to those who value their privacy or wish to avoid the prying eyes of governmental institutions. But perhaps one of the most compelling aspects of cryptocurrencies is their potential to disrupt traditional financial systems. Cryptocurrencies operate outside of central banks, providing an alternative to government-controlled money. Some believe that this decentralization could lead to a more equitable financial system. However, the allure of cryptocurrencies should not blind us to their potential risks. The crypto market is notoriously volatile, with values that can fluctuate wildly in short periods. And while the potential for high returns is certainly attractive, this also means the potential for significant losses. Moreover, the relative anonymity and lack of regulation in the crypto market can make it a hotbed for illicit activities. This has led to increased scrutiny from regulators, creating a climate of uncertainty around the future of cryptocurrencies. But while the potential for high returns is alluring, it's important to remember that with high reward comes high risk. The crypto market is a roller coaster ride. Are you ready for the ups and downs? Imagine being strapped into a roller coaster, the kind that shoots you straight up into the sky and then plunges you back down in a matter of seconds. That's what investing in cryptocurrencies can feel like. The prices of cryptocurrencies like Bitcoin and Ethereum can surge to incredible highs, only to drop dramatically in a matter of days, or even hours. This volatility is due to a number of factors. One is the fact that the crypto market is relatively new and still finding its footing. This means it's subject to sudden swings as investors react to news and developments. Another reason is the lack of regulation. Without a central authority to oversee transactions, the crypto market can be unpredictable and sometimes a little wild. This lack of regulation also opens the door to potential fraud. Scammers can create fake cryptocurrencies, run Ponzi schemes, or take advantage of investors in other ways. This is not to say that all cryptocurrencies are fraudulent, far from it, but it is a risk that investors need to be aware of. And then there's the issue of security. Cryptocurrencies are stored in digital wallets, which can be vulnerable to hacking. If a hacker gains access to your digital wallet, they could potentially steal all of your investments. This is why it's so important to take steps to secure your digital wallet, such as using two-factor authentication and keeping your private keys offline. So, while the promise of quick high returns is tempting, it's important to be aware of the potential pitfalls. It's not a ride for the faint-hearted. It's a ride for those who are ready to strap in, hold on tight, and weather the ups and downs. And remember, as with any investment, never invest more than you can afford to lose. In the next scene, we'll talk about a different kind of investment: stocks. They might not offer the same thrill as cryptocurrencies, but they do offer a track record of more stable, long-term returns. Stocks, they're the old guard of investing. But what's the appeal? Well, let's take a stroll down memory lane. Stocks have been with us for a very long time, centuries in fact. They emerged as a way for businesses to raise capital, and for investors to take part in the financial success of those businesses. Fast forward to today, stocks have become a staple in the world of finance and a key component of many investment portfolios. But what sets stocks apart from the shiny new kid on the block? Cryptocurrency? Stability. Over the long term, the stock market has shown a steady upward trajectory. While there are dips and dives along the way, historically, the trend has been one of growth. This contrasts with the wild swings we often see in the crypto market. Another appealing feature of stocks is the potential to earn dividends. When you own stocks, you essentially own a piece of a company. If that company turns a profit and decides to distribute a portion of those earnings back to its shareholders, you get a piece of the pie. This can provide a steady income stream, separate from any potential capital gains from selling the stock at a higher price than you bought it for. Additionally, stocks offer more than just financial returns. They represent a slice of ownership in a company, giving shareholders voting rights in key decisions. This allows investors to have a say in the direction of the company, something that's usually not available with cryptocurrencies. While stocks may not offer the same thrill as the roller coaster ride that is crypto, their stability and predictability make them a solid choice for many investors. They offer a sense of security that's grounded in a long history of resilience and growth. So, while the allure of crypto might be enticing, remember the old guard of investing still has its charm. Until next time, let's keep the conversation going about the fascinating world of investing. And remember, it's not just about making money, it's about making informed decisions. No investment is without risks. So what are the risks and rewards with stocks? When you buy a stock, you're buying a piece of a company, and with that comes the potential for high returns over the long term. As the company grows and succeeds, so does your investment. That's the beauty of investing in stocks, the opportunity to share in the success of businesses worldwide. But it's not always smooth sailing. Companies can fail, and when they do, stock prices can plummet. This risk of company failure is a reality that every stock investor must face. But it's not just about individual companies. Market volatility can also affect stock prices. Economic events, government policies, and even societal trends can cause the market to fluctuate, sometimes quite dramatically. So how can you navigate these risks? The key lies in diversification. Think of it as not putting all your eggs in one basket. By spreading your investments across different companies and sectors, you can mitigate the risk of a single stock or a particular industry doing poorly. But diversification isn't just about spreading risk. It also opens up more opportunities for growth. Different sectors perform well at different times, and by having a diversified portfolio, you're giving yourself a chance to benefit from these varying cycles of growth. However, diversification isn't a one-size-fits-all strategy. It depends on your individual circumstances, your risk tolerance, and your investment goals. And while diversification can help manage risk, it can't eliminate it. That's why it's important to do your homework. Understand the companies you're investing in, keep an eye on the market, and stay informed about global events that might impact your investments. And if you're unsure, consider seeking advice from a financial advisor. While stocks can be a safer bet than crypto, they still require careful consideration and research. Remember, investing is not just about making money, it's about making informed decisions. It's about understanding the risks, managing them, and positioning yourself for long-term success. It's about being smart with your money. So, crypto or stocks, which one is right for you? Now that's the million-dollar question, isn't it? The answer, however, isn't as straightforward as we would like it to be. It ultimately hinges on your personal risk tolerance, your investment goals, and of course, your individual preferences. Investing is not a one-size-fits-all endeavor. It's like choosing the right pair of shoes. What works for one person might not necessarily work for another. It's a deeply personal decision, driven by a multitude of factors, including your financial situation, your long-term objectives, and your comfort level with risk. Cryptocurrencies, with their high potential returns, could be tantalizing, but they come with a level of volatility that can be stomach-churning. They're relatively new to the financial scene and can be subject to sudden regulatory changes and security concerns. For some, the thrill of this high-risk, high-reward scenario is part of the allure. For others, it's a deal-breaker. On the flip side, we've got stocks. They're the traditional, more established players in the investment world. Generally, they offer more stable returns over the long term. But even they are not immune to volatility and market fluctuations. Individual stock prices can swing wildly based on a host of factors, from corporate earnings reports to geopolitical events. This is why it's absolutely essential to do your homework. Thorough research cannot be emphasized enough. Understand the market trends, study the historical data, and keep yourself updated with the latest news. And if all this sounds a bit overwhelming, don't hesitate to seek advice from a professional financial advisor. They can help you navigate the complex world of investing, tailoring a strategy that best suits your needs and goals. In the end, whether you choose crypto or stocks, or a mix of both, the choice should be guided by what aligns with your financial goals and your willingness to take on risk. As the saying goes, don't put all your eggs in one basket. Remember, the best investment strategy is one that aligns with your financial goals and risk tolerance. Why choose when you can have both? Let's talk about diversification. Imagine you're at a buffet and you're only allowed to choose one dish. You could go for the spicy chili or the mild chowder. The chili, much like cryptocurrency, might offer a bold and exciting experience, but it could also leave you reaching for a glass of water. The chowder, akin to stocks, is a safe and comforting option, but it might not give you that adventurous kick. Now, what if you were allowed to have both the chili and the chowder? That's the beauty of diversification. You don't have to limit yourself to one type of investment. You can spread your capital across various asset classes to mitigate risk and potentially enhance returns. Think about it this way. If you invest solely in cryptocurrency and the market takes a tumble, your entire investment could be in jeopardy. On the other hand, if you have a diversified portfolio, a downturn in one sector could be offset by gains in another. Moreover, diversification allows you to take advantage of the unique benefits of different asset classes. Cryptocurrencies, for instance, can offer high potential returns and give you exposure to innovative technology, while stocks give you a stake in established companies and typically offer more stable returns over the long term. But remember, diversification isn't about randomly picking investments. It's about strategically allocating your capital based on your financial goals, risk tolerance, and market conditions. That's why it's crucial to do your homework, keep up with market trends, and consider seeking advice from a financial advisor. And don't forget, diversification isn't a one-time task. It's an ongoing process that requires regular review and adjustment as market conditions change and as you get closer to your financial goals. So whether you're a risk taker or prefer to play it safe, diversification can be a powerful tool in your investment strategy. Crypto or stocks, it's not an easy decision, is it? We've delved into the allure of cryptocurrency with its potential for high returns, and we've explored its volatility and risks. We've also considered the stability of stocks, an investment path more established, yet not without its own set of risks and rewards. The choice between engaging in the crypto market or investing in stocks is intensely personal. It depends on your individual circumstances, your risk tolerance, and your investment goals. Possibly the most effective strategy could be diversifying your portfolio with a mix of both, balancing the potential high returns of crypto with the more stable, long-term gains of stocks. Remember, the arena of investing is not a game of chance, but a game of strategy, knowledge, and patience. Ultimately, the best investment is an informed one. So, do your research, consider your options, and make the choice that's right for you. And please like, share, and subscribe.